I do want to get to the economic situation as well. The Bio Investor Forum was held last week in San Francisco. I wasn't able to go there, but reportedly the industry got an unpleasant reality check. And it was, I quote, "It's pretty ugly out there now, and it's very likely to get a lot worse before it gets better." Is the current financial trouble putting a damper on this in a temporary, is it a temporary blip, or do you expect this to have some kind of really profound impact, changing the course on either side of the Pacific? How is the economic situation now affecting the industry? Definitely short term, but how do you see the impact long term as well?
Right. So first, everything runs in cycles. These, in the long term, barring a geopolitical catastrophe of some kind, in which case we won't care about these kinds of questions. In the long term, all of this will turn around. And growth will resume and investment will pick up again. In the short term, with respect to China in particular, China has been going through a correction already, even before the global financial meltdown. This is something that I think doesn't get a lot of coverage here. Part of it has to do with China being a victim of its own success. During the past 20 years of rapid growth in China, the Chinese currency has been pegged at a fixed rate, a fixed exchange rate versus the dollar. Right, that exchange rate for a long time was approximately 8.2 renminbi per dollar. As a result of China's success, there is a consensus in the banking world and in the economic world that the Chinese currency is undervalued. And that artificially low valuation has, of course, continued to fuel China's export success. For a variety of reasons, partly foreign pressure, but also partly the need to rebalance its economy, the Chinese government has been trying to engineer a revaluation of the renminbi by allowing it to float in small increments. Every time they loosen the peg, it immediately readjusts to a higher valuation. So at this point, the renminbi is trading at approximately 6.7 to the dollar. That adjustment has happened in less than 2 years. That is an enormous adjustment for export-oriented businesses to absorb. And in fact, in the past year, hundreds of Chinese factories and small companies have gone out of business. These are companies that were really primarily export dependent. The Chinese real estate market, after being insanely hot for a long time, has been going through a correction. So in some cities, residential real estate has dropped 20–25% just in the past half of a year, which is a drastic correction when you consider how painful it is here. The real estate meltdown here. Right. The Chinese real estate correction was caused by completely different factors. China is not nearly as leveraged as the US. Right. So China has been going through its own correction already. The world financial meltdown will primarily have an impact, I believe, through a slowing down of foreign direct investment in China. Right. So the kinds of stuff that we do, investing in new companies in China, that's going to slow down for a little while. There are undoubtedly other factors that that Ben Bernanke could tell you about with much greater depth than I will ever attempt. Right? So I'm not an expert on economics and on currency markets, but I think from a business standpoint, those are some of the obvious things that are going to happen. But the flip side of it is that even in a global downturn, there are some who do better than others.
Right.
Now, on this point, I would probably get violent disagreement from some people in my world, and probably agreement from others. But I think that this financial crisis is going to hurt the Western economies more than it's going to hurt economies like China. And so money doesn't just flow in the direction of absolute opportunity, it flows in the direction of relative opportunity. So I think that actually the correction in China is going to have the effect of reducing asset prices there, which will again make them far more competitive on a cost basis than similar investments here. So after some time, and I don't know how long that will be, I think people will again find China to be an extremely attractive place to park money.
Okay.
So this global meltdown could, and I'm not going to make a bet on this, but I think it could end up in the long term actually accelerating China's rise relative to the industrialized countries. But only time will tell.
Okay.